Good afternoon, this is Dyer from Divergence Analysis. Today we're looking at the DVAN SmartLines package that we offer on TradeStation on the Trading App Store. Best way to find us on the Trading App Store is go to TradeStation.com, click on the Trading App Store tab and search DVAN in the search box and you'll see all the indicators that we have available. We're looking at a chart of the S&P E-mini, a 5-minute chart on May 3rd. This is from the open till about midway through the afternoon. The three indicators that are comprising the DVAN SmartLines cycles package, which we're going over, are the SmartLines, which you can see create these red and green cycles showing buying and selling cycles. The short-term trend indicator, which is green and red histogram showing the intermediate trend, the confirmed trend within that cycle, and a leading line, which is showing where the force confirms the trend and where the force is more active within that trend. Also, the DVAN long-term trend is included, which indicates bullish or bearish bias in the overall trend. This really helps manage our expectations as we enter a trade looking for more and for the trade to continue in the direction of the trend as indicated by the short-term cycle and the smart lines. I also have overlaid the price bars, which show buying and selling pressure, either red or green, which is also an offering on the Trading App Store that you can trial for free. So right after the open, or excuse me, right before the open, you can see a few things that are leading us to believe that the open should continue in a negative manner. The histogram bars go from green to red in the short-term cycle indicator, indicating that we're seeing the possibility of a change from what was an uptrend pre-market to a downtrend right before the open. We also see the red price bars that are telling us that selling pressure is taking over at that point as well. We also see the long-term trend indicator going from bullish to bearish. This doesn't always happen at the same time as the cycle changes, but when it does, it indicates an even stronger confirmation of that trend directional change. A few minutes after the open, or actually right at the open, and then the next 5 minutes after the open, we see the confirmation of the conversion into a sell cycle. You can see that from the two outside lines that are shading these cycles converging together. That shows convergence from a buy cycle to a sell cycle, or a sell cycle to a buy cycle. So with the red price bars, the convergence into a sell cycle, the red histogram bars on the short-term cycle, and the leading line also showing us that the force is already in the negative direction. This is a confirmed entry to the downside. We can see that this ultimately ends up being a nice strong move to the downside, and a few things to look for in managing your trade: support and resistance point, and ultimately exiting your trade. The cycle lines follow down in natural support and resistance points. The main support and resistance point within the cycles is this black line, which is called the pivot. The pivot's plotting the price point one period forward at which the trend will change direction. So as long as the close is below the pivot, the trend is going to remain down. A few things for an exit. When we see prices coming back into the cycle, and when we also see the leading line coming back into the short-term trend histogram, that's showing us that the leading force and the main part of that down move is coming into a culmination, and we could be experiencing consolidation and potential trend change. So we see that here. During this period of time, when we go from red histogram bars to green histogram bars, it's telling us that the downtrend should be over and we would be looking for an uptrend. While that happens though, we're still in the red shading or the red cycle, so that's really a period of consolidation that's not showing a confirmed trend in one direction or another because the cycle and the short-term trend are not agreeing. Once those do agree and you see the short-term trend staying green from 10:45 on till about 2 p.m., once those cycles and short-term trend do agree, that's indicating that this S&P is moving into an uptrend that's more confirmed, and we can expect a good long trade out of it. You can see that we remain in the green histogram bars for a few hours after that. And another point I wanted to touch on was at 12:40 p.m. Eastern Time is when the long-term trend moves into a bullish bias, which tells us through this period of consolidation, although we remain constructive and bullish because we see the short-term trend bars remaining green, this is the point where we would expect more. And as you can see, after we cross up through the long-term trend indicator into a bullish bias, this continues in a larger way into a bigger uptrend. When prices start coming back into the cycles after this nice trending up move, the leading line comes back into the histogram. This is another point telling us that there's a potential trend change, and this would be a good point to exit our long trade, or at least pull up a stop pretty tightly to protect our profit. I hope this helped. If you have any questions, please reach out to us at info@divergenceanalysis.com or our website for the apps, DVAN SmartLines. I'll include both of the informations in the bottom comment section of the video. Thank you.